If you're trading Forex and you don't have these levels on your charts, you're actually sleeping on a lot of opportunities, which can save you some losses or even get you more wins. Those levels are... I try to read every single comments and create content around what you're all asking. So here's me backtesting EURUSD. And if you like it, let me know what pair I should backtest next, and I'll do it. As I understand, a lot of people here are trading Forex. As I don't have much data on EU, I can't give you the best displacement measure for this pair. However, what I can do is base my trades on important grab of liquidity. I'm sure this will be interesting. Alright, so on the 15 minutes as usual, I've marked all of my levels, and let's just go on the 1 minute. A lot of people have been asking me to also include the London session when I'm backtesting. This is me also doing that, so I can satisfy as much people as possible. Alright, so let's start. So what I want this backtest to do is just show the importance of today's high, today's low, and some yesterday's level. So we're starting at the London Open, and we have this displacement of 7.5 pips with this fair value gap taking out those high. But however, what I'm looking for is taking out important levels such as today's high and today's low. So let's mark still this fair value gap, which is something I would suggest everyone doing, especially starting up with the 22 ICT Mentorship. Is just every time you see a fair value gap, just mark it up, and you will build the confidence that those levels are very important and getting respected. See here, that was one example. See the precision, we came back and filled the entire fair value gap to this point and went directly to take out all of the liquidity that was residing above this high right there. Why is there liquidity here? Because people sell here, put their stop losses here, then we move a little bit, maybe they don't take profits, or they move their stop losses at break even, and then we take out those people. Let's see now if we have all of the necessary criteria to take out this trade. So we took out this level here, this low right there. Let's check if we have maybe a fair value gap. Yes, we do. So here's this fair value gap on the second leg of this move. Then I can just put my level right there, cover the high right there, and then just go for a 2.5. 2.5, which is not too far from today's low. So let's check how it goes.
Hey, let's go.
You see how we respected those levels every time? Let's clean a little bit. Alright, and something else we need to do now is to update today's high right there. And then also today's low. Let's remove it. Because currently the low of the day is currently this low right there. So we took out this low and had a displacement, leaving this fair value gap here. And taking out this high. Let's check if we can have an execution. Just let's go with 5 because I feel like 4 would be too low. And also be very careful with your broker's spread, because sometimes they're different from TradingView, or even the volatility can trigger some stop loss. This is something to be aware of, and it's part of our job. So I would go for this level right there, this one, this high, for a 2.9. So I'm triggered, and this was a loss. Alright, so once again, we took out those lows and starting having a reaction. With a small displacement like that, leaving this fair value gap. So since I have all of my rules met, let's just put the order right there, cover the stop loss below this level, and then just go for the first level that's giving more than 2.5, which is in this case the 2 days high for 3.5. So we're triggered. And then we're almost to it. Let's check if we can take it out. Alright, and there you go for 3.5. So now let's just update the levels. So we have currently today's low, which is this level right there. So after taking 2 days high, let's check if we have a reaction to maybe sell. Alright, so we have this small low right there. We took out the liquidity that was residing above 2 days high, and we have this small fair value gap. So I'll just go there, put my order. We have to cover this high. 4 is a little bit too low, I think. I'll go with 5 pips and then just go for the first level, which is here 3.5. And there you go. Oh wow, we even went directly to take out the liquidity to 2 days low. So what I really wanted to focus in this video is you can see how we're going from one low to another, from one high to another, which is what the algorithms are doing, just grabbing liquidity and engineering liquidity. And this would have been here 9%, but of course I just took it at 3.5, which is very good. And once again, of course this is backtesting, but what I'm asking you today is what can you get out of this backtesting? You can see how we're going from one liquidity grab to another. And this is what's important here. I'm not talking about money or anything. I just want you to learn something here and to see how you can apply this to your trading. Alright, so of course after taking 2 days low, we had a great reaction once again. So we're not surprised about that anymore. Let's see if we can take out this high and then maybe take a buy. So we have this small fair value gap, but no trades since we didn't take out this high. However, we filled it and then went up. Let's check if we have a fair value gap. Oh, sorry, let me update also the 2 days high, which is this level. See what I've been talking about? We went from 2 days low to again 2 days high, taking out everybody that's trying to sell here. And then we have this huge fair value gap. However, since we already took out all of the liquidity above, I'm not going to take those trades because there's nothing stopping it from after taking 2 days high, then going back down. But you can see here once again the precision. So we're coming not too far from yesterday's high, so we took it. Let's check if we have a reaction from this point. So no fair value gap, no trades for me. This is why I have a checklist. Alright, so I think there's something forming here. After taking out this low and also this low, we have this fair value gap right there. So why not take a sell? Anyway, we had a lot of good trades today. Let's just follow because we're working on a methodical method. So let's just take it. So you can see here after 9, you can see the volatility is different and my stop loss is much higher with the 12 pips. And then the first target, which would be around this point here. Alright, so this would have been a loss. But we have this fair value gap. So maybe we can go back to it and then continuing back down. However, we didn't take out those levels, so I don't think I'm going to take this one. But we filled it and had a nice reaction, so this could have been a great trade. Alright, so we're getting close to the end of the New York kill zone. You can check out ICT's video about that. And I think it stops at 10 or 11, I'm not sure. Let's just continue to 11 just to see if we have something else. So once again, we took out those high. Continuing back up. Alright, so we're starting to see a shift here. So we took out this low right there. We have this fair value gap and this fair value gap. Let's just write them. You can put your order. Like I said, we're at the end of the New York kill zone, but let's just take it at this point. We're just playing here. We're learning. But this thing is just to learn. Nice execution. And nice reaction. And there you go. Again, what I want you to take out from today's video is how we're going from one liquidity point to another, which are sometimes those extremes of the day, and hopefully it helps you in your trading. And if you want to see how I would trade the PM session, you can check out this video right there.